I just put on a portfolio hedge today that has a 10-to-1 payout. Let's talk about the trade. I sent this out as an alert to Pristine Capital members earlier today at 9:49. I put on the S&P 500 SPY ETF, a June 17th 425 by 400 by 375 put butterfly for $2.25. So you might be asking, what the heck is a butterfly? Why would Andrew be hedging? What's going on? I'm not familiar with any of this. We're going to walk through all of it step by step. Before we do that, quick risk disclaimer: nothing in the video should be construed as investment advice or recommendations. Always follow your own trading plan, your own risk parameters. Don't YOLO your entire account into this trade, any one of my trades, or any one of your trades. All right, let's dive in. So for the backdrop around why we would use this structure and why I would put on a portfolio hedge, we have monetary policy tightening that is occurring. We all are hearing the whispers, seeing the headlines about inflation, how it is spiking, and that is causing the Federal Reserve to have to tighten monetary policy. We have these interest rate hikes that are coming down the pipe, and we also have the balance sheet unwind, which is going to be announced as early as this upcoming Fed meeting, which is going to happen in 3 weeks. And what I'm noticing is that we are actually seeing technical weakness manifesting in the S&P 500. This is the perfect opportunity to put on some sort of hedging structure just in case this all goes horribly, horribly wrong. All right, so let's take a look. This is the technical weakness that I'm talking about here. This is our S&P 500 SPY ETF weekly chart. And what I noticed is throughout the entire 2020 and 2021 bull run, we were really respecting this pink line, which you'll see here. This is our 20-week simple moving average. As soon as we got into 2022, no longer respecting it. We had one retest of the 20-week moving average, huge failure. Second retest, another huge failure. So now here we are. We just failed at that 20-week moving average. And now the next technical level to the downside is the yearly point of control at $417.94. Now we've already retested this level multiple times throughout 2022. So far we've had 4 tests of this level. Every time you retest a level, it gets weaker and weaker. So we have reason to believe that we're going to get there due to this failure at the 20-week moving average, and also due to the number of times we've tested it. There's reason to believe that it is possible that we fail at that level. Well, if we fail at that level, where's the next area on our technical roadmap? The next key area is our yearly value area low over here at 405.6. So we want to put a structure on that. Hey, just in case that happens, we want to be covered. So let's take a look here. This is the alert that was sent out to all Pristine Capital members. Again, we put on this June 17th 425 by 400 by 375 put butterfly, and I got this on for $2.25. Now here is what this looks like in my Thinkorswim platform if you were actually looking to put this structure on. So it involves buying one of the 425 strike puts, then selling 2 of these 400 strike puts against that, and then buying the 375 strike put. As of right now, this is marking at a debit of 240, so it's already gone up a little bit since this morning, and that's just because the market is down today. But you might be asking, like, could I just use a regular put? Could I just buy the 425 strike put? Yeah, you could certainly do that. The key difference here is by selling these 400 strike puts, we are reducing our initial outlay. I want to risk a very small amount to potentially make a much bigger amount. So I like taking trades that have 3-to-1 risk reward ratio, 4-to-1, 5-to-1. This one has a 10-to-1 just in case the unthinkable happens and the Federal Reserve sort of fails in what they're looking to accomplish. It has a max risk of $2.25, meaning you lose all the premium that you put up, which I only risked a small amount of my total capital on this. I put about 1 to 2% in here. That way, hey, in case the trade works, that 1 to 2% is going to grow to maybe 5, 6, 7, or 8% even. Could grow as much as to 20%. The max reward here, again, is the $22.75. So you're risking $2.25 to make $22.75. Now, our profit zone for the S&P 500, you make money on this trade if the SPY ETF is trading between $422.75 and $377.25 at the expiration date of June 17th. Now I visualize this for you just to make it a little bit easier. This is our SPY chart. We have here our profit zone, which is the in between these green lines. Now remember, at the top of our profit zone is 422.75, bottom is 377.25, and the maximum profit where you make that full $22.75 is at the 400 strike. Now, going into this structure, I know the odds of this trade winning are low. They're less than 50%. But if the unthinkable happens and it hits, that's going to be a really nice winner. So for me, it's worth it. I'm going into this basically saying, hey, this little insurance policy, I'm going to put this on in small size. That way I can sleep at night, and that way I can just go about my trading. And if all of a sudden something bad happens, hey, this thing will cover me. Now, the other drawback about doing a butterfly rather than just buying puts is, let's say the unthinkable happens, the market starts to correct. If you go below 377.25, let's say the market really crashes, you're gonna leave the profit zone and you will take a max loss on this. But to be honest, the likelihood of that happening is pretty low. So yeah, this trade, 10-to-1 risk reward ratio, put this on as a little insurance policy. If you enjoyed this trading idea, please go ahead, do me a huge favor, click the like button on the video, subscribe to the channel, and get 10 of your closest friends to also subscribe. My goal is to get this thing to about 1,000 subscribers, hopefully by the end of the year. I think that is a pretty realistic goal. Also, if you want to learn more about my trading strategy, options trading, you want to trade with our community, go ahead and visit pristinecapital.net. That being said, that about does it for this video. I'll see you all next time.